Welcome everyone from Traders Community Studios Sunday evening as we prepare for another week. Punters, dribblers, investors, traders, whatever your horizon and levels. So please share in any questions, just put them in the chat there and happy to answer them. Remember, this is not financial advice. We are just discussing what has gone on, what we're seeing, our experience, and perhaps some ideas out there. A lot of dribble, probably. So remember, prepare and trade responsibly. And that's going to be part of the theme today, because what we have seen in the past week is extreme low volatility, way back until October of 2021, which, if you think back, how wild it's been since then. So why is that? We're going to discuss what's happened through the week and what we can expect in the week ahead. So let's get into it. Let's have a quick look of where we are at the moment. So we are Sunday night. Remember, it is Anzac Day for those in Australia and New Zealand. It is considered the most sacred holiday in that part of the world. It is the remembering those that have served the countries, and most outside of those two countries will probably remember it as Gallipoli, say in the US or in England. So it's kind of like Remembrance Day, Victoria Day, but a very sacred day. And so our thanks goes to all those out there. And that being said, that I'm also mentioning that because a lot of people are on holidays, because it is a public holiday on Tuesday. So a lot of people have taken the weekend off. Okay, so just quick eyeball of where we are. You can see that natural gas, oil don't really have a big move up here on Sunday night, which is probably a good thing, the way everything's going. Before we go into individually on the week, the market weekly, the first thing I want to point out, because it's going to be a lot of what's dominating, is we look at this in the bottom corner, this VIX chart. You can see the triple bottom from this year, from February. We had that blowout up there, the banking crisis, etc., and we are actually under that now. So that's fairly significant, obviously, right? So if we're going to look at, we'll bring this down here, and we'll bring this down. And so here we are. We're going to go through this week, right? So here's on the website. Feel free to go on there, and you'll find everything on there. So we put all this together. And we're going to go through the different markets, cover stocks, bonds, commodities, and oil and gas and foreign exchange. And those that have been listening to us and familiar with us over the years, you can see they all interact. We want to be proactive on all this. There's a lot of misnomers, particularly in FinTwit, how macro and micro work, how they interact. So we want you to be ahead of the curve, which I think many of you have been. So if we look at last week, I mentioned at the top that we've been very, very thin, low volatility. And what does all that mean? So prior to this year, or the last couple of years, it obviously would be often a warning, it's a calm before the storm. And I think we've all been aware of that, but we keep having these failures, the latest being the bank failures, the end of the world, and it doesn't eventuate. Much to do with that is because of the sheer volume of optionality, of sheer volumes out there. So it becomes like a handbrake on the downside, and on the top side, it's kind of like a ceiling you can't get through, until, of course, it all falls to bits. Now, why is that? Just the sheer volume. And so there's a study we're going to talk about that now. It's not just, because they're all interrelated, right? So it's not just in stock markets, it's also in currencies. the separate, so we have a separate Forex report, separate commodity report, and bonds report, different people put together for us, which thank you, and that's all just, we try to keep it all free. It's basically pay for all the servers and that is basically for advertising, people clicking on ads and stuff like that. So keep it as unbiased as we can. So anyway, that's it. So crude oil, for example, closed much where it did in the last few days, but over the week it fell 5%. It fell into that gap, right? Still hasn't closed it if you think back a few weeks ago. Natural gas is just been spinning just either side of $2. Gold back under 2,000 for the front month. And as I said earlier, on the stock market, you can see here the S&P 500 was the lowest range, only 55 handles. The lowest range since November 21. Nasdaq, lowest since December of that year, and the Dow of August of that year. Now, that's surprising given we've already been into the earnings season. So we've already had the big banks, right? We've already had people like Tesla, and we're about to go into big tech this week coming up, Microsoft and the like, and we finish with big oil. So Exxon and Chevron will report at the end of next week. So why is that? Well, there was a study I came across. I can't remember if it was one of the papers, but it's from the University of Munster in Germany, right? And they did a study on the ODTE. And so you can see this picture here. Now, you can see the profit and losses of the market makers, the losses of the retail, right? So in other words, this here is the optionality. Now, so while VIX is low, as we looked at earlier, the spreads remain the same as far as what the taker, the price taker, the person buying the option, is paying. So the person making money is obviously the person writing it, right? So the ODTE used to just be called same-day options. Now it's worked its way into the stock market, and it's only May 2022 that's become a thing in the stock market. So if those of us that have traded things like natural gas and currencies, it's been around for 15, 20 years at least. Okay, and it wasn't a thing for retail investors. It was a hedging tool for the professional market. So that's important, and that's why we're going about dribblers and punters, and people are setting themselves up for someone they're not, particularly on FinTwits and stuff like that. Okay, so they came out that $358,000 is lost a day since when these things first came out. And they estimate the retail crowd's market share has gone to over 6% in 2022 versus 4% the prior year. So the flip side of that is also there's 94%, and so that's going to be hedge funds and stuff like that that may be doing, so they mightn't just be straight out buying hedging, they could be spreading it against their positions that they have to have, right? So of those same-day options, 75% of them are on the S&P, right? So that's slowly treating, people are on the Nasdaq or the Russell, but 75% of the S&P. So part of that also is going to be, there's a lot of attention come to JPM's big, and there's others, big vol funds where they sell the vol, to hedge money and stuff like that. So you get these big open interest spots, which at certain levels, that's why we always say to watch them and how the market trades against them. Now, part of the reason we do trade as a community is try to pass on our knowledge. And I can't warn enough about dribblers, particularly those that use too many big words to explain themselves. Keep it simple, and clearly they don't know what they're talking about, or you wouldn't have these losses. So just be aware of that, right? Just look at this graph and go through it. So that's $20 million has been lost until the end of February, right? So anyway, so significant. Now, why are we talking about this? And the low volatility. And I think that has a lot to do why it's kind of staying in this range, because the sheer volume of it keeps it constrained. And because we're in a bear market, so that's a massive volume, right? But it's not enough because they're all on. It means there's already a lot of protection on, or a lot of people trying to go the punt, right? So that's why it's not getting through there. So now what's going to be the black swan that gets it through it? Will it be complacency? It could be any of those things. It could be, a big change or a surprise with the Fed or something like that, interest rates, a major blowout that they can't control, whatever it may be. But a true black swan is something that you're not thinking of. Now, what was interesting was there was a IPO this week. UCAR was a symbol. So it did what it was doing at the last year. You had those crazy IPOs moves. Generally, they're Chinese. They're very thin, low float. So we had one that was up 660%. By the end of the week, it was up 30%. So it didn't even last for more than 6 or 7 hours. So generally these would last for more days. So you can see that this isn't a liquidity out there, which explains part of the optionality. The other thing, the moves aren't lasting long. So we had all the regional banks collapse, principally because those California, New York banks went broke. Then we had the major banks' earnings, the money center banks, like JP Morgan. We had all those have earnings, and the bounces just aren't lasting. So if you notice, the banks, particularly the regionals, came off this week. So there truly are dead cat bounces, right? And so I mentioned at the top of the hour, where's the fear? So this is the functionality of fear and the sheer amount of optionalities going on, right? So, demand and supply. So that's the background there. Okay, let's look what we got to go ahead. So this week we're going to have a slew of... firstly I should mention that we're going into hibernation as far as the quiet period, they call it, for Federal Reserve speakers until the FOMC. So yay, cheers for that. A lot of the nonsense won't be out there. So we did have a lot of commentary through the week, and it seemed we had Harker, Williams, and Mester, and I want to say Bostic also spoke. It's pretty well the same theme. Inflation's high. They're going to keep it higher longer. Now, what's astonishing is they haven't let up on that, despite all those banks collapsing. Right? So that's an interesting fact. Anyway, the biggest thing as far as central banks last week was the RBA, the Australian government. Had a independent review on the RBA for the future. Though, obviously, if you're in Australia... So, RBA is different to, say, the Fed's a private organisation. We know all that, all the different conspiracy theories, blah, blah, blah. So, most of the countries are government agencies, or for the people, however you want to word it. However, there was an outcry in Australia, and justifiably so, you'd think, when basically they were saying interest rates weren't going to go up. I mean, they did that in other countries too, but Australia's a little bit different. And then all of a sudden it did. People locked into mortgages, basically in a property boom, so they're locked and loaded. In reality, it's only up 2 or 3%, but it gives you an idea how tight people were. This is a country that's you got to put down more, in most situations, more 20% down, if not more, in your deposit, right? So, anyway, that caused a lot of outcry for both sides of the political spectrum. And it's a report on, you'll find it on Traders Community, going through them. There's 51 recommendations. You can take it all up. That's RBA Fit for the Future. So it's interesting too, if you're not from Australia, that this is what's going on with central banks, right? The obsession in particularly in the US, is the digital currency central banks, all the different conspiracy theories to go to that, for want of a better word. I think that word's overused. Okay, so this week it's all going to be all about inflation. The other thing was with central banks, we're going to have the new guy at Bank of Japan. He's going to have his first meeting this week. Okay, so what we're going to do is, for this week, we're going to have, to the following week, we're going to have the big ones. The FOMC, Bank of England, ECB, I believe, are the big ones. We're all going to have monetary policy meetings next week. They've pretty well all indicated they're going to raise rates, right? Just a question, a quarter or a half. Okay, so this week we're going to get information for it. So the big one for us is going to be the PCE comes out on Friday. So that's the Fed's big one. That's the one they always, Powell will refer to. The core PCE, I should say. So that's their preferred measure of inflation, particularly the core price deflator. And you can see comparing that to CPI. So we had CPI out, was it 2 weeks ago? And that was low, but it's still up there. So you can see the relevance. It's not always perfect, but you can see it's pretty close. But they like it because apparently we don't eat. If you don't eat, you don't sleep. Inflation matters. So that's out on Friday. Ahead of that, you're going to get Germany, Spain, and France are going to have their CPIs. Italy's out next week, the following week, and the amalgamated or aggregate Eurozone CPI can't come out until that. So that'll be after that, and that'll come out 2 days before the ECB meeting. Okay, so you want to keep an eye on that. In Australia, you got their quarterly CPI. Now, if you remember down there, they never used to do monthlies. Now they do with the ABS, so that comes out. So that, again, but what you look at down there, similar to the PCE, they're going to look at the trimmed inflation, they call it, the trim mean. So they're going to look at that. And when I say they, I mean the market is going to look at that, right? As well as the central bank. Now they do the ABS, so that comes out. So that'll be out. So also the big one, at least as far as bank watches, there's going to be a lot of. So if you go back to, was it last year when they changed Kuroda, his last thing, I guess, one of his last things was change the spread they were looking at, right, on their bonds as far as they're trying to control rates and therefore inflation. Now they do have inflation there now. So there's been speculation that they will change that. The intimates, is that the word I'm looking for? That the new chap is going to talk about, which is UEDA. I think I'm saying that correct. So this is going to be his first monetary policy interest rate decision meeting this week. So inflation's gone from basically nothing to 3.8% year on year. So, and that's also a lot to do with the yen appreciating. So if you remember, the yen went all the way, dollar yen that is, went over 151. They heavily intervened. It's now back at 130. So is that a level they wanted at? It's a lot to do with that as far as targeting everything, exports, inflation, etc. So that's going to be interesting. The Bank of Canada had their meeting last week or the week before. So they have what's called, it's similar to what we know as minutes from, say, the Fed or the RBA or even the BOE, but it's a little bit different. There's a little bit more to it, and that's called the Summary of Deliberations. That comes out this week too. So that's relevant for a number of reasons. Canada being obviously the closest country to the US, the nearest neighbour, that and Mexico, but the closest more in policy, energy policies, etc., etc. It's also a commodity country, so people that trade that, the Australian dollar, Kiwi dollar, also of interest. And you can go through, there is a separate report on everything coming out. Okay, earnings season is getting deeper. You can see we are in a recession. Depends how you want to call it. They keep reinventing it. I mean, it's beyond a joke what they do politically in the United States. I think everyone agrees with that. Just keep it logic. Look at the history. And so you can see how that works out. So next week you got Mr. Softy, Microsoft. You got Amazon, Google. A lot of these people are going to look a lot towards what they actually say. So Google is obviously AI is a big deal. So Microsoft's going to talk about that. Google's going to talk about that. Microsoft's got Activision. And then we got just general economy things like Amazon now being, how big they are. We also have Meta, formerly known as Facebook. Will he change his name back again, given the absolute flop of Metaverse? Interesting. Didn't quite work out that misdirection there, did it? We also have some standard consumer companies, Coca-Cola, PepsiCo, and of course Caterpillar, which is a great indicator of global, not just United States, so that they're out of Texas, but it's a global conglomerate for mining, construction, etc. So that's always one to look at. Boeing is a good one for politics. I mean politics as in the geopolitics, the decisions that has. Visa and MasterCard are also important to watch for the consumer and the economy. And things like that, they come out as well. Then we got at the end of the week, we got Exxon and Chevron. These are going to be really well looked at. We've already seen Exxon came out and said that they took a big loss on, I want to say it's natural gas hedging. They also wrote off a bunch in Brazil for some of their offshore leases there. Obviously, there's also a change going on there with Lula as president. The stuff going on Petrobras, lots of same stuff. Brazil's really talk about a bit of a firing shots off everywhere down there. He also got his stuff with BRIC, doesn't want to be in the US. Chevron, also the big one. Chevron massive, and actually Exxon and Chevron massive in natural gas. And there was talk out, I believe it's on the website there. Who were they looking at buying? Pioneer, I think Exxon was the talk. Chevron massive in the Gorgon and all that. Down in Australia with natural gas. And that's also going to be interesting because you'll get an update. You saw that with Rio with their iron ore last couple of weeks because of the big cyclone down there. So we'll see what Chevron has to say about that. So they're the ones you're going to watch. That'll also filter through to energy. Tesla. So I like to keep an eye on that as far as, now it's kind of lost its favoritism, if you want, from the punter and dribbler. And you can see a lot of that's gone towards the S&P, but there's no volume there. So volatility, tight ranges may go elsewhere. Now, if we look at this chart, you can see the big move up. This is a 4-hour chart. The big move up was on their last set of earnings, right? So we went and we had this a peak. Remember, look at your crowd behavior. This peak down to $100 of negative sentiment. They all got bullish, and you can see that was AI, whatever. But anyway, we ran it up through there. The vol crush was significant, and is what we're seeing on the S&P now. Now look what we had this time. The opposite. The Q4 of that should say 22. It says 23. Obviously, it's wrong. Hey, that damn AI system doesn't print too good, does it? Anyway, all jokes aside, we saw the opposite here. We also had some with the SpaceX rocket blow up that became a bit of a negative. So anyway, we got this going on. Now, if you want to look at the grid, you can see it actually grids perfectly. Wow, the low was under 100. I forgot about that. 99.51. You can see it got a spit of plus 1.8, and it hit that 218 right there, the zero, and coming back down, we're almost at 50% of this whole move. So nice rebalancing, right? So anyway, that gives you an index. Just keep an eye on that, and obviously that's very attuned to relevant news with electric vehicles, political, Musk, all this, Love him or hate him, he affects stuff. Okay, I wanted to keep this up here, repeating it, and keep an eye on these if you get a hand on them. I think Scotiabank, they're a Canadian bank. They do a really good economics report down there that is not just vanilla. That's why I like it. They cover, Latin America. They're Canadian as opposed to the big banks out of the US, which is pretty much the same thing. Goldman, BA, etc. Not saying they're not good stuff, but they're just a little bit different, a little bit more interesting. We trade more commodities and currencies, and use them also to help your stock market. So these are things you want to watch if we're about to really get destroyed. And now these charts are from 3 weeks ago, after the banking, where we didn't think it was all going to collapse, and we turned out to be right on that. But that was based on experience and what we're seeing in the market and spreads, right? So that said, something I didn't mention at the top of the hour, we have 3 big bond auctions this week in the States, right, from the Treasury. So how they're received, we haven't had a good bond auction for a long time, really. They've all been C to Ds. As far as I can remember, it's been a while. And also indicative for inflation. So they're out this week. So that could be a catalyst before Friday's drop. Anyway, keep an eye on these. Interbank lending, bond market liquidity. They're Canadian, so they also have Canadian stuff on here. And then the different treasury bonds. You want to look at, so we've seen safe haven with the Swiss franc. We've seen it with gold. Gold, by the way, did, however, spit back under 2,000. And stuff like that, right? Keep an eye on the US dollar if that becomes back that way. We covered BRICS last, and there's a good article on the side as far as New Zealand, China. Almost the same there, really, if you go back to that last election. But anyway, we regress. So there we go on. How screwed are we? Worth keeping an eye on the financial sector, the GSC assets and the like. So go do yourself a favour. Okay, let's speed this up a little bit, right? All in the news, the debt ceiling. Keep that up every time. Keep an eye on China, inflation. Here we are. If we go look at the CBE, you can see there, we touched on that. The put-call ratios, the fear's not really there, is it? Look at these ratios. The put-call's 0.89. And you can see there that fits in with your VIX. So that also helps explain why that VIX is like that, right? As far as the sheer volume of the ODTE, you can see where we are year to date. We're still very much a Nasdaq year up. It's still up almost 20% on the year, right? For all also that's a factor how much was crushed last year. Let's not kid ourselves. But and we fiddled through last week. We can see energy. I think was a big one the week before. That was a big loser this week as far as communication services. So you can see the market's rotating very fast, and there's 2 things there. There's confusion. I mean, it's just become a joke politically in the States as far as Biden, Trump. I mean, it's just sometimes you have to, is this for real? I'm sure in everyone's country it's not dissimilar. You can see mass riots or protests going in France. England seems to be angst from what's going on over there, and you can see this right around the world, right? At the same time, that's just making, there's a flip-flop and almost a numbness, perhaps the market's telling you that. So positions aren't being kept on. And part of that's the short-term nature of it with the ODTEs involved. Okay, so expect more of these flips every couple of weeks. The big jump, the biggest winners this week, actually, that's last week was JP Morgan, so that will be updated for you. You can see France hit a record high and maintained that again this week, so that's now up 17% for the year. And Italy's up 17% for the year. The significance is France is the one. So, firstly, Russia was going to destroy everyone as far as the energy, all these economies were going to be destroyed. We know the stock market is not the same as the economy, but it is a good indicator of the warmth or the sentiment, particularly the business community in those countries and the investor. So we're at record highs on the the CAC 40. So it's fairly against the narrative of what's going on. So look, be hot, cold and dry. Obviously the Euro's bounced as well. So that is actually even a bigger move. If you're from the United States and you invested in that at the end of last year, you're up that plus the Euro's gained, right? Okay, let's look at across at Asia. You can see the big one there is South Korea. Again, that's a bit like the Nasdaq here. That was hit the most, right? Australia, very much moving up and down with commodities. So the big one, iron ore, and you can see iron ore futures have been hit for 3 days straight. Now, think what that also means to those betting on a Chinese recovery. I think people underestimate how big a hole China actually is in, we try to keep a little bit up ahead there. If you can see through the nonsense that goes on, particularly over here with different news and fake news, Russia, China, all that sort of stuff, that people take as being fact. So the bottom line is you can see that, and you can see that in oil as well, coming down the gap. So natural gas, a little bit different because it's domesticated. It's not really, is it? It should be domesticated, but it's domestic. See, that's why you look at your LNG and your relationships there. Anyway, so you can see on Friday there's some heavy selling in those stocks. Rio, BHP, Fortescue, Champion, and BHP also cut their production targets for the Australian nickel and the Chile copper mines, right? So that's also significant as far as metals go. You also saw, as far as commodities, and there's more in the commodity weekly, but lithium was also talk of that being now nationalised. So when you're investing in commodities, keep in mind of what country investing, right? So Russia was a great example with the war, but it's also in other countries, South America, Africa, wherever it may be. So there is a lot of difference. You know, I know people all go on about the New World Order and all this sort of stuff. Look at where you're investing. Look at the stability of the countries. Look what's going on in Sudan, for example. I mean, very sad what goes on, right? So that's another unmitigated disaster of Western policies interfering in other countries. On one hand, you'll read, but it's also sadly, a lot of these countries just haven't evolved, right? For want of a better word. Okay. Let's not spend too much time on that. Okay, let's look at the S&P. So we've talked about what's happened, and I'm going to look at it on here. We'll look at it a little bit later on if we got time. As far as the charts go, we're going to keep it on here. We're looking at a bigger picture. So on the daily, you can see we're maintaining the range, and we got all this resistance. So there's a lot to get through for this to really get up. But with this lack of vol, this is becoming a more and more either reverse head and shoulders, which means if it breaks this, simple terms, 3,500, that's 600 handles to an all-time high. That seems crazy till you look at the CAC 40, right? So that is possible. You got to respect that. The bearish side of this oil is sideways, and you'll see when we look at weekly, I just want to show you it here, this is a massive corrective pattern, like an ABC, right? To go a lot lower. It's a big wedge, however you want to call it. Okay, so that would be same thing, 600 handles from here. It should be a test of the double bottom, or or the previous bottom, I should say. I beg your pardon. So we can look at all our waves. It really does model perfectly through Know the Wave, and you can see these Senate spheres of influence, how powerful they are. So they just keep replicating. Now, what's interesting is generally they fail, right? But this one has stayed up longer, it does seem, but look at the time factor, right? So you can see this breakdown, and that comes into potentially this week. So it's a big week on a number of things. You're going to look at the bond auctions, you're going to look to all those inflations and growth. Okay, let's go to weekly. Look what we've done on weekly. So the daily was basically looking at this. So we haven't looked back since here, really. We're now coming in to where it broke down on a weekly basis. So really big levels, actually. And we're at the top of this daily cloud. If it was to get over here, that gives you that potential. And you gotta always remember the market's always right. You're not Nostradamus, or whoever you want to think you are. So just keep it technically and fundamentally. So you look at the macros, you look at the possibilities, and you look at what math. There's a mathematic and a reading of crowd behavior. That's basically what Nova Wave is. So there is that potential to get up. You can see very much the sideways wedge, right? In other words, all this is correcting in time and price from here to here, right? So you got pretty clear what both objects are. Now, what I've noticed is there does not seem to be bulls other than brokers. You see this in those in oil and gas. You see the same people all the time pushing their oil and gas companies all the time, basically, right? They all go deathly quiet when it all collapses. Now, that just happens to be a market I know, or closer to, but it's in every market. So you want to look at, and then at the same time, you're seeing all the macros and FinTwitch, particularly the gold bugs. It's the end of the world, it's the end of the US dollar, it's the end of the West, and all this sort of stuff, right? This cyclically keeps happening until I guess it is all the end of the world. So keep all that in mind, keep both your options open. So that's your SPOOs. And that's pretty black and white, right? That's the top of your weekly right there. So that's massive resistance, particularly of everything else. Nasdaq has been the leader, but as I said, this was the one that got crushed the most last year. Now, just simple fibs. Look at that. It bang, bang, bang. And once it got over it, so the retest is the big thing. And we talked about the top about optionality. That's a lot to do with it. And the psychology of most people is to break even, to not lose. That's why you tend to see people take their profits too early and hold their losses a lot longer. In everything in life, in relationships, you name it, right? That's just human psychology. So this is all about measuring psychology. Okay, you can see the difference here to the SPOOs. We're actually over here. So this then becomes 1, 2, 3. That was your ABC, where it was going to be the end of the world. So this is now playing out as 1, 2, 1, 2, 1, 2, right? So remember the SPOOs are already up here on the weekly, right? But Nasdaq's higher here because it went down so much. So keep that in mind. So what you're going to look for is divergence between the indexes, right? And that's really just an easy way to see what the big blokes, when I say big blokes, doesn't mean they're always right. They tend to not be right, but you want to follow the money. The Dow Jones can really be dictated, because it's only 30 stocks, by one of the major influences. But look again, very similar, right? The difference is here, you see a very powerful ABC into this low. The complete opposite. That's more generally through history. This is a power move to go a lot higher. Interesting. Right? The others gave you a two-way bet. So this gets very significant if it can get through this plus 2.8. Now, because of our time, we've been up here so long, sideways for so long, right? This is basically since we've been in recession under the old old way it was counted through all history books until the US government decided to rename what a recession is. So keep that in mind. If this is already recession, what does that mean, right? Reverse head? Possible, right? It's not looking as silly. Russell 2000, though, we come here and we go, oh, shies. Look at this, right? So remember what this is. It's small companies, majority of them don't make money. And we couldn't even get, look how weak this is to everything we just looked at. So go back through here. The idea is to look at all these, and you can see just perfect selling. Now, this is a difficult one to trade. Wide spreads. I remember I tried to trade this on options and futures, very thin, and it was never really worked well. You'd never make as much as what you could. You'd lose more than what you would. This is your classic gambling, right? You make a little bit, you lose a lot more. Unless you did it, the correct way to do it would be in a basket of currencies if the spreads weren't so much. So it's something that I don't really like because liquidity, but I like to look at it, kind of like Bitcoin, to see what's going on with the P's and D's, right? Very clear. So remember, we're up here on the S&P. We're about here on the Nasdaq. We can't even get over the bottom here. So remember, small economy, big economy, recessions. All this tells us we've been in a recession for quite a while, right? It's not a bad thing. So, okay, now let's go to the semis. That's been the hot one and why the Nasdaq's where it is. So look at the power here. What's interesting as we go in the video, you can see this has come right back here, but we haven't accelerated down. But if this is a rising wedge, it can just drop out of anything. Look at these previous ones, right? So that's why your Nasdaq's up. Now, you look in the video, which is the main one of that, particularly with AI and all this other stuff. So if this is another fad, all we've done is correct to this breakdown level, right? And that's also plus 1/8. So that was, you can see almost a perfect measured move. The reason we mark this to that was your fifth wave, we marked it as, or your C wave. And we've corrected nicely through that. And you can see that did a perfect 618. That's kind of your old way of measuring 1.6, 1.8. Remember, you're measuring hertz. Everything expands. As spreads get wider. Bottom of fear, your VIX, all that sort of thing. If you were to flip your VIX chart, that would be the height down there. Apple's your big one. Through all this, look at Apple. Very, very construed. So this is a number of, obviously it's a big consumer replication, iPhones, services, all this sort of thing. The other big thing with this is so many central banks and I'm trying to think. I know S&B is a big one. I think I'm trying to think who else actually owns a big swag. But point is, a lot of central banks own this. A lot of big funds own this. BlackRock, other ones, they now pay a dividend. So it's kind of like your safe haven, right? That it's your safe haven with a bit of tech exposure. But what I notice is it just trades technically very perfect. So you got these influences. And it's come out the other side. You can see just perfectly, these are weekly charts. You can see this very big bull flag. This is also in every major index, right? It's in the Spurs, it's in Nasdaq, it's in Dow. Okay. This is the dog of the bunch, the Archie, I forgot a name for a minute. Cathie Woods, right? So we put this back looking, so the reminder how far we came down and how many, while we warn you about the dribblers. They're all telling you to buy all this. I don't mean the dribblers just talking stories, like the guys that set themselves up as experts, right? But look what it's done. And it's never really bounced from this. When you look at that Tesla chart, imagine if she didn't have all that Tesla and taking those profits, where that fund would actually be. So just it's just there as a reminder more than anything. Okay, Exxon. Big one. This is earnings this week. Look what it's pressuring. This is very, very similar to Apple. It's interesting. So it went from end of the world for oil. We're never going to use oil and gas again. to all the way up here. The reason it's this last little bit resembles Apple is it also tells you that a lot of people are using it for dividends, right? So it's not just pure oil and gas, and it's like Apple's not perceived just as an iPhone for, obviously it's more than an iPhone. So, okay, bonds last week, very flat week. See, basically look at how much we moved. Not even much movement on the curve, right? Very, very small. But that will be different this week. One suspect all we had was a 20-year last week. And we're back into 3 decent bond auctions this week. Mortgages actually went up 5 basis points. So the interest rate went back up. And so a good little thing. I won't bore you with all that. Commodities. The big one was feeder capital, which I found interesting because I did see a report that New Zealand stopped live export of cattle. Well, mainly cattle and sheep. So, unrelated, more than likely. It's more a weather thing and all that. But that was the biggest move, 10% wheat. What's interesting, that also got a pump because corn prices collapsed, right? Corn fed and wheat prices were lower. So, hay and corn for your store-fed cattle, which is the majority of American cattle is store-fed. Whereas in countries like Australia, grazing, I'm not sure about Argentina. You have the big beef. I'm pretty sure that's grazed, though. I just don't know the percentage. I know it's mainly grazed. Okay, platinum and palladium were also big pickups. That was a lot to do with ETFs and gold. And so probably a spreading out of taking profit on gold, perhaps, and increasing the leverage or the punt in the platinum and palladium. There were other elements involved. Interesting that lumber just keeps falling. Remember, that was a hot one. Anyone building houses 2 years ago. So that keeps falling. Go to this and you'll get I'll just click on it real quick, give you an idea what's on there. So you got a nice breakdown of everything that's happening in commodities, right? And so there's also some nice stuff there from other people who contribute to these. So copper's your big one. Copper is what everyone went the punt on. It's just hanging on 50. It needs to hold this 50, right? That's also very symbolic of the economy. The world. It's in the old economy. It's also in the new economy, right? Even though, as far as it used to be all about copper pipes, that's been replaced by PEX in many situations. Okay, what's your ETF flows? You can go through here. And lithium we talked about earlier. Gold, very significant with gold if this is a triple top. Look at it. So gold bulls, always ultra bulls at the top. It's a conspiracy down here at the bottom every time, right? So just trade it. Use your brain. Look at oil. Look at gas. Look at where it's your ETFs and stuff like that. It does trade very well technically, all these things. But anyway, good breakdown there. In the metals are also moving, tin and other things, right? Now, a lot of these are geopolitically sensitive. So it could be, for example, lithium, we mentioned earlier. A lot of these things, like iron ore, Australia, etc. Right? So commodities, copper, we touched on gold, we touched on oil and gas. So we're coming into this gap, right? We didn't quite fill it, but we're coming into it. We talked about this with OPEX coming up. If you follow us on Twitter, there'll be a lot of good analysts and traders. Once a week, we'll jump on and talk about it around the barrel and around the barrel, and into the vortex. But anyway, of discussion was the OPEC gap. So that is in play. We're almost filled it, not quite. That's your oil. Pretty clear what's going on there if you want to be. So don't remember, a lot of people that. It's no different to stocks, right? You got your spruikers, you got your Uber bulls, Uber bears, right? So try and be logical. Look at recession. Look at what currencies are doing. Technicals you want to use because it gives you a pictorial what's going on. Okay, natural gas. So your punters and dribblers that all got caught up here, all aggressive. Someone attacked us on Twitter. I had to bloody nearly wet myself laughing. But so this is never rigged. This is always rigged, right? That's their view. Nothing to do with what's actually going on. If it's rigged here, it's rigged there. 3s and 5s. Anyway, forget all that. Look what we're doing. We're being in this area since $162 for quite a while now. In simple terms, look at your tank and it's holding it down, right? And just think what all this means. We are a long way from anywhere, but it's obviously pretty hard to short here. Why would you, right? What's your upside? You know, if you're a hedger and all that, you got to. But for speculators, that's a big risk if it breaks through here. So this is not a market you need to be playing in unless you have to. Is the bottom line here. Go read the more specifically on the breakdowns on oil and gas. We spend a lot of time on that indices for the actual people who trade that. What does that mean? Cheap energy, right? Cheap energy. As far as the US, the trouble is, in Australia, the US in particular, the biggest in the world for this stuff, there's so much tax and everything built in, the consumer doesn't get the benefit, right? And it's not as if these oil and gas companies have made a lot of money, particularly oil companies, but you just saw Exxon's writing off, what, $3 billion or something? So when these companies want to tax, like England you saw with the, windfall tax, you saw them pull out of it. You see threats from US President Biden and oil companies. So the reality is they don't want to produce anymore because we are transitioning. It just takes longer. And also the sheer cost of it. You saw Exxon lose in Brazil. The problem is oil companies were really bad. We all know that. All commodity companies took advantage through the world, particularly in the Middle East and Africa. Now you're seeing China do the same thing. In Africa, in Russia effectively, the way I look at these deals, Iran and Russia are now subservient to China, basically. Is, you know, maybe hard, maybe not what we want to hear, but I'm just black and white. Obviously, there's a lot of grey in there. So what does all that mean? What it means is politicians and journalists have just, so particularly in America, it's just left and right, even though they're not really left and right, but they like to think they are Democrat, Republican. So these situations get in there and it distorts the truth for what's going on. So look at what really is going on. Those losses we just went over real quickly, and on oil and gas prices, and it makes a lot of sense. We are pumping at record production on natural gas, right? So we are also seeing so-called fracking running to an end. Now, whose advantage is to say that? We're seeing that swing really propelled by OPEC, and which is basically supporting Russia. OPEC plus, they're all on one camp, we're on another. So if you look at it another way, you could take the argument too. So they're obviously saying it. The US companies are saying it. Why? So they don't have to overproduce, so they can spread it all out. There's SBR, so the Energy Commission here, whatever they're called. The government department clearly doesn't have a good understanding of oil and gas because they've got people that aren't in there. Remember, it's all politically based, blah, blah, blah. So look at this black and white. So it means don't get crazy bullish here. Don't get crazy bearish here. Remember how this was going to 200? The same people who said this was going to 0, right? So just look. The reason I look at fibs is it gives me an idea of the percentage of people one way, underwater, or in profit, right? Just think about that. 38% is close enough to a third. Let's round it up. 50 is a half. Think about it like that, right? Okay. Anyway, spend enough time on that energy drib. Interesting too on the freight index. So this got massively oversold. A lot to do with this bid. Well, it got massively overbought because it's so thin and we ran out of ships and COVID, and then it's come all the way down. So the true balance is pretty well in the middle. We saw when rates rose for central banks, it collapsed everything. This is a good indicator of what's going on in shipping. So there are other shipping indexes. This is just the weighted one. If you want to get a better idea of coal and iron ore and stuff like that, you look at Capex and stuff like that, right? Different size ships. There's also a weekly report on that. What we saw was we pushed up. Now, this was a lot to do with Chinese New Year and COVID being shut down. So all this, there was no shipping, right, basically, of those routes. And then this will be affected, those other indexes, by, most of the world's iron ore comes out of one port, Port Hedland in Western Australia, right? Then you've got Vale down in Brazil, that's it. Okay, so look at that. Forex, you can see the euros doing a lot better. Remember, it was the end of the world on that. It's around 110. A lot to do with that is by surprisingly better numbers that comes out of there. So it's not as bad as well. And it's what the stock market was saying. The stock market's seen a little bit ahead. So what we've seen, not good news for Mr. Putin, is that Russia's kind of gone backwards, whether they want to say it or not. But these other countries have corrected a lot as far as their energy, right? And you're seeing that in there. Now, there's obviously France is a particular issue with their pensions and all that. But remember, they also went one way. They gave a lot more to the worker. Very much more your old school socialists there for a long time, and that's why there's so much angst against Macron, because he's actually before he was president, he was the finance minister of the socialist government there, right? Now that word gets changed around, so I don't really like. I think people misuse the word socialism than what it simply means, right? It gets construed of communism and all that sort of stuff. Anyway, the relevance is we've got the euro, the pound, as I mentioned at the top, had its tightest range, very similar, and the euro very similar to the stock market, really tight range. Do they break out on the separate charts? Go to look at the FX on that. Aussie, Kiwi, Canadian tend to follow commodities. You can see also, and all these people talking about the BRICS and all this sort of thing, taking over from the US. Just look at the disaster that is things like the Turkish currency, the Brazilian currency, but particularly Turkey's just, it's like a third of its value just year on year. But if you go outside a year, it's lost a lot more than that. And just the people that are distraught down there, right? Or up there, wherever they are. Okay, so all relevant crypto, you can see Bitcoin did this perfect ABC. If you're a bear, that means this goes a lot lower. Now, this is the punning side of the stock market. What's interesting, Nasdaq hasn't done this. Before, these would almost emulate each other, The Russell has. So if you're a bull on so I'm going to keep an eye on this to see if this is ABC, which means this comes down to basically nothing, right, under 12,000, or this is a double bottom. And this is your punter's paradise. That's how all I see it as. You can see that move there, right? So this is going to be relevant to that ABC on the S&P and Nasdaq. So use this to help guide you what this bigger move's going to be on the stock market. See how they all fit in? Now, on Ethereum, we marked as ABC just to point out that would mean that you're negative of it, right? You can see, pretty obvious. Count out everything in threes. So there you go. Big blurb on banking. What we're watching this year, we went through most of them. The fundamentals to set up rate hikes. That means the S&P, just to summarize before we call it a night. That's S&P and Nasdaq, etc. The big thing's going to be CPI, GDP globally, right? And heading into all those central bank meetings. So we went through all that. You can see every country, Australia, Europe, they're all got them. Bank of Canada, watch that deliberations. If you're Canadian, I know we have a lot of Canadian members and people that we compete interact with us. So a lot coming out there. Actually, one thing I didn't mention was Sweden does have its rate hike. So they're more than likely going to raise 50 basis points to keep up with the ECB. Remember, they don't have as much meetings. So the only central bank meetings we have this week is Riksbank, which is Sweden, Bank of Japan, Russia, and Colombia. Okay, so they're your central banks. Remember, the Fed's out. As far as what we're watching tomorrow, nothing really. The Fed manufacturing's relevant particularly for those that trade energy. That's out tomorrow. Chicago is kind of lost. The place has become such a mess. If you've seen what's going on there, so it's like the society's broken down. Something out of that. What was that movie? Attack in New York or something like that with Kurt Russell. That's what's going on there. We got our housing price index. These are always a month behind, but worth working through. You have the mortgages, which are more closer. You can just use a bit of common sense there. So you got a lot of housing numbers out on Tuesday. You also got consumer confidence. You got your first bond auction, the 2-year. The next day, you got your mortgages we're talking about. You got durables. That's a really volatile one. But what you want to see, you want to keep an eye on your VIX. You want to see if people move out of there. You want to keep an eye on your spreads, your 2s, 5s, and 10s, as far as your bonds and stuff like that. Right, that'll give you a good indication there. Keeping dollar yen and as well. Wednesday, we always get our oil. Remember, well, you get API Tuesday, but that's kind of no one watches that. But EIA always Wednesday, unless it's a holiday for oil. Always Thursday for Natgas. You got your 5-year on Wednesday and your 7-year on Thursday. So you got 3 bond auctions you want to just have an eye on. Thursday you got your GDP, your Q1 advance, so that's going to be the big one, and your deflator. Keep an eye on your jobless claims. That's become, that's slowly being more people out of work. You got more home sales. Natty, as I said. Now, the big day for the US is going to be Friday. You got your ECI, wage cost pressures is your big thing. I think last time I was on, I made a little bit of a quip about your higher minimum wages actually can be a good thing because it means there's more money in circulation. Obviously, inflation higher, but it's not cut and dried. So it's not a cut and dried thing, right? I think you should if you work hard, you should get paid well, right? It shouldn't just all go to your CEO, as it does in the States and probably more than anywhere. Anyway, PCE, you've also got Chicago PMI out, which is your last one before the national PMI. So kind of like the CPI situation in Europe. And you got Michigan consumer sentiment. So Friday's a ton of data, right? And it's without central banks talking. Europe, we went through. You got all your GDPs. You got your IFOs out of Germany. We went through most of the stuff there. Nothing. As far as China goes, you're going to have your GDP there as well. Your IP and your retail sales. So more you want to look at that sort of stuff. England, you got your business optimism. That's always worth looking at. South Korea, GDP and semiconductors have been really weak. Samsung and Taiwan Semi. So you want to see what's going on there. That's significant because that's reflective of orders, right, that they're getting, which gives you a flashback then to the country. Everyone's using either Taiwan or South Korea, basically, for the most part, other than niche semis. And that's pretty well it. As far as earnings go, I think we touched on them. Let's have one more look. If I didn't mention anyone, they're all there, I think. Yeah, we went through all of them. There you go. So thanks for that. Hopefully you got something out of that, and I wasn't just wasting our time, your time, my time. So there we can see. Let's have a quick look at energy before we go. So this is a breakdown of what? So this is your weekly chart, and this is a breakdown that we show you. So we had this massive move up. The question is this a 3 or 5? 3 would mean we go significantly higher, and we're correcting this. If this is a 5, this means this is more work to do to the downside. Now, oil's representative of the world's economy, isn't it? So that is a great indicator. So if we already are in a recession, that's what this is. Remember, this is being distorted by Russia being off the market, supposedly, but we really know they're not, because India's buying it, China's buying it, etc. Right? So think about that. So if that means if there's not an oil around, we always turn around. This quickly becomes ABC, significantly higher, right? But look what's controlling it all, the 50. So just use your numbers and use your words, use your common sense. Daily, even clearer. That's breaking this down for you a little bit more. Look what we failed. So we broke up on OPEC, that OPEC Plus deal, and we're back under it, and we're under it, right? So that gap and for those who knew Ichimoku, that was a classic pull down here. And those following us on Vortex, I think myself, I remember Jason Tidwell mentioned he was looking for a pullback to 77.75, which he got. Great call by him there, 77.50s. And look where we closed out at, right? So here we are here, and I think I made a quip for 75s, but that was really because that's where the 50 was. So we can get all the way here on that twist, which would be the top of it, fills the gap, and right. So what you want to do, it gets down here, you want to watch what it's doing, right? Was this? See how it's just worked its way down? So wear that together. Okay, Natty we already looked at. Let's look at this. This is a real hard to look at chart, but it's one to run an algo off. You can see how clear these cells were, right? It only gave 2 buys. Look at these cells. Hasn't even tried to buy this back. That's since almost $8. You can see now looking back, we blew it up on that weekly. You can see how heavy that is, what needs to get over. I think that's pretty well all we need to look at, right, punters? Here is a quick look at the bonds. So you can see, we print this as well. So this was the low yield of the year. So this is when we're all going to die. This was also the banks. Remember, this is the 10s here. So this is yield. So that means bonds up, bonds down. It's an inverse. So we just marked certain events on here. And you can see how they do react. So that's why you want to understand your fundamentals plus your technical. So we had this bounce here because, so remember the US economy is, I think it's 80% is service, is the biggest. So service PMI is a big factor, and that was a big number, and that's why the bond market took it like that. Okie doke. So that's all we got from us. So if you like what we're doing, if you want me to, I try to fit all these in as best we can. We'll get people on. It's hard working in with trading. But if we are getting something out, please like, subscribe, share it. Send us messages. You can either get on the Traders Community website, join it. In the forum, you'll see there's a lot of people who don't like social media. So they're on the website there. Or you can on here on YouTube. However you like it. We will, for those in Australia and New Zealand, all the best for Anzac Day. Enjoy your holiday. Respect. For those in the rest of the world, have a great week wherever you may be, but you don't have holidays. So have a great week all. Happy trading. Enjoy your family, enjoy your friends, keep a perspective. Everything's beautiful. Bye now.